Bitcoin just gave the market a serious scare, dipping below the critical $100,000 mark before bouncing back. Now, with the price hovering around the $104,000 to $106,000 range, the entire market is holding its breath. Everyone is asking the same question. Was that the dip to buy before we rocket to new all-time highs, or is this a bull trap setting up a much bigger, more painful correction? You can feel the tension in the market right now. Social media is a tornado of fear and greed. We're seeing headlines flash across our screens, with some calling for a catastrophic drop to the $74,000 range, and others promising a slingshot rally to $150,000 or even $200,000 before the year is out. This is a moment of serious pressure where fortunes can be made or lost. The fear is real. A sustained break below that psychological six-figure support could trigger a cascade of liquidations, wiping out billions and shaking the confidence of even the biggest bulls. On the flip side, a strong bounce from here could be the final confirmation that this bull market is about to enter its most explosive stage. So, in this video, we're going to cut through all of that noise. We'll ignore the speculation and focus on what really matters, the hard data. We're going to do a deep, balanced analysis, looking at the objective evidence from every angle. We'll explore the on-chain metrics that show what the smart money is doing behind the scenes, dissect the key technical indicators that are defining the market structure, and weigh the bull case against the bear case to give you a clear, comprehensive picture. Look, nobody has a crystal ball, and I'm not going to pretend I do. My goal is to give you the information and the framework to make your own informed decision. We'll identify the specific price levels that matter, the signals that will tell us whether the bulls or bears are taking control, and the strategies you can consider for whatever comes next. By the end of this, you won't have a crystal ball, but you will have a plan. Let's get into the data and figure out what's really happening around this pivotal $100,000 level. First off, we have to respect the immense buying pressure that got us here and understand the powerful forces that could push us even higher. The bull case for Bitcoin right now isn't built on flimsy hope. It's anchored in solid, observable data that suggests this pullback is just a healthy consolidation in a much larger uptrend. Let's break down the evidence. Let's start with the on-chain data, which gives us a transparent look into the Bitcoin network itself. One of the most compelling bullish signals is the behavior of long-term holders and institutional players. Recent on-chain analysis from late 2025 reveals a fascinating trend. Strategic accumulation is in full swing. While the price has been volatile, shaking out short-term traders, large wallets, the so-called whales, have been quietly and consistently adding to their positions. This doesn't look like panic selling, it's strategic buying. These are experienced players who see the $100,000 price point not as a ceiling, but as a new floor being built. They're absorbing the supply from sellers who are shaken out by the volatility, which is a classic sign of wealth transfer from weak hands to strong hands. And the institutional adoption of Bitcoin isn't a future promise anymore. It's happening right now. Spot Bitcoin ETFs and corporate treasuries hold a massive amount of the circulating supply. For example, reports indicate US spot Bitcoin ETFs alone hold nearly 1 million Bitcoin. This creates a huge structural source of demand that just wasn't there in previous market cycles. Think about it. A significant chunk of Bitcoin's supply is being locked away in these long-term investment vehicles. This creates a supply shock dynamic. While daily ETF flows can be volatile, with periods of outflows causing short-term price drops, the macro trend is one of immense accumulation. This ongoing institutional bid provides a powerful layer of support for the price. Now, let's turn to the technicals. The chart itself is telling a story of resilience. Bitcoin is currently finding support near its 200-day simple moving average, SMA, which many traders see as the line in the sand between a bull and a bear market. The fact that buyers have repeatedly stepped in to defend the recent lows around the $99,000 to $100,000 area is no coincidence. It's a deliberate defense of the long-term uptrend. A successful hold and bounce from this area would be an incredibly powerful technical signal. Another key indicator, the 14-day relative strength index, RSI, is hovering in neutral territory. The RSI is a momentum indicator, and our current neutral reading is actually pretty constructive for the bulls. It means the recent pullback has successfully washed out a lot of the speculative excess that built up during the run to the all-time high. It's like the market has taken a breather and reset. From a neutral RSI, Bitcoin has plenty of room to rally before it would be considered technically overbought again. Finally, let's consider market sentiment. While the current mood is fearful, with the fear and greed index recently hitting levels as low as 22, extreme fear, contrarian investors see this as a classic buying signal. The whole point of this index is that extreme fear often means investors are too worried, and the market could be due for a bounce. History shows that periods of maximum pessimism have often preceded major market rallies. When you put it all together, the strategic buying from whales and institutions, the defense of critical technical support, a reset momentum oscillator, and a fearful sentiment reading, the bull case is compelling. It paints a picture of a market undergoing a necessary and healthy correction. For the bulls, this dip isn't a trap. It's the last stop before a potential journey to $150,000, $200,000, and beyond. Of course, a smart investor looks at both sides of the coin with equal scrutiny. Ignoring the bear case right now would be reckless. The arguments for a deeper correction are just as data driven, and they point to real risks that could send the price of Bitcoin tumbling. Let's build the case for why this $100,000 level might not be a floor, but a trapdoor. The most immediate warning sign comes from the technicals on a shorter term time frame. While long-term support might be holding for now, the 50-day moving average is acting as a heavy ceiling of resistance, currently sitting around $111,000 to $112,000. The price has been rejected from this area, which suggests short-term momentum has turned negative. Even more concerning is the potential formation of a death cross. This is a technical pattern that happens when the short-term 50-day moving average crosses below the long-term 200-day moving average. Some analysts are warning that this pattern is currently forming. Historically, a death cross is seen as a confirmation of a shift to a bearish market trend, and should this cross happen, it could trigger a new wave of selling. One technical analysis suggests a death cross scenario could open the door for a plunge of 30% down to the $74,000 level. Second, let's look at institutional players from a different angle. While the long-term accumulation trend is real, the short-term flow data from Bitcoin ETFs tells a story of fading demand. After strong inflows earlier in the year, October saw a dramatic shift, with some days experiencing significant net outflows in the hundreds of millions. On November 10th, for instance, inflows were reportedly just over $1 million. This sharp drop in demand from the very entities that helped push Bitcoin into the six-figure range is a major red flag. It suggests that at these higher prices, institutional appetite might be cooling off. This cooling demand is mirrored by another concerning on-chain metric. Some long-term holders are starting to sell. While we talked about accumulation, not all long-term holders are acting in unison. Some analysts have noted that a segment of experienced investors has begun taking profits in significant volumes, a pattern historically seen near market tops. This creates a headwind. If new demand from ETFs is slowing just as older investors decide to cash out, it creates a supply-demand imbalance that could push prices lower. The corporate treasury argument also has a counterpoint. While Michael Saylor's company, formerly MicroStrategy, continues to be a major buyer, with recent purchases in early November, the overall pace of corporate buying has been a topic of debate. If the most prominent corporate bulls start showing any signs of caution, it could signal to other potential adopters that now is a time to be careful, not aggressive. Finally, we can't ignore the broader macro environment. The crypto market doesn't exist in a bubble. Uncertainty around factors like interest rates and geopolitical tensions can lead to a risk-off mood, where investors sell assets like Bitcoin and run to the perceived safety of cash. The recent crypto downturn has been linked to traders reassessing risk ahead of economic reports from the Federal Reserve. If these macro headwinds keep building, it could dampen risk appetite across all markets, and Bitcoin wouldn't be immune. So, when you assemble the bear case, it's formidable. We have a potentially dangerous technical pattern, slowing ETF demand, some long-term holders taking profit, and a challenging macro backdrop. From this angle, the bounce from the sub $100,000 lows looks less like a show of strength and more like a temporary break. It could be the bull trap that lures in the last batch of buyers before the market makes its next major move down. The bears are arguing that the line in the sand at $100,000 will break, and if it does, the path to the low $90,000 or even lower could open up fast. So we have two powerful data-driven stories pointing in opposite directions. On one side, the bulls are pointing to strong-handed accumulation and and the defense of long-term support. On the other, the bears are highlighting weaker short-term demand, worrying chart patterns, and macro pressure. What does this mean for you? How do you navigate a market sending such conflicting signals? This is where we shift from analysis to strategy. In a market like this, making a single massive bet on one outcome is incredibly risky. The smarter approach is to think in terms of probabilities and to have a clear plan for both scenarios. The key is to identify the critical price levels that will prove one side right and to decide in advance how you'll react. The conflict between the bullish and bearish signals tells us one thing for sure. The market is at a major inflection point. The battle between long-term macro bulls and short-term tactical bears is being fought right now, with $100,000 as the main battleground. The tension between these two forces is what's creating the volatility we're seeing. Therefore, the most important thing to do is define our lines in the sand. Based on the data, the battlefield is clear. Here's a plan broken down into simple if-then statements. These are the key levels to watch. The bullish confirmation level, a break and hold above approximately $112,000. The first major hurdle for bulls is to break through the resistance of the 50-day moving average, which is currently around the $111,000 to $112,000 zone. A decisive move above this level, especially if it turns that old resistance into new support, would be a huge bullish signal. It would show that buyers have absorbed the selling pressure and are ready to push higher, likely invalidating the immediate threat of a death cross. If Bitcoin can clear this zone, the next logical target would be the previous all-time high region around $125,000. The bearish confirmation level, a sustained break below $100,000. On the flip side, the confirmation for bears would be a clear sustained break below the $100,000 psychological support. A quick dip that gets bought back up might be a fake out, but a daily or weekly candle closing decisively below this level would be a very bearish sign. It would signal that the bears have won the battle at this key psychological point and would likely open the door to a deeper correction. The next major support zone could be found in the low 90s thousands, with some more bearish forecasts pointing all the way down to the April lows around $74,000. With these levels in mind, let's talk strategy. Your personal approach should depend on your time horizon and risk tolerance. For the long-term buy and hold investor, if you believe in Bitcoin's long-term value, this short-term volatility is probably just noise. For you, this pullback toward $100,000 might be an attractive opportunity to add to your position. The strategy of dollar cost averaging, DCA, investing a fixed amount at regular intervals, is perfect for this environment. It removes the stress of trying to time the bottom perfectly. You're essentially adopting the mindset of the long-term holders we discussed, using this period of fear to accumulate. For the swing trader or tactical investor, your approach is more about timing. You're watching the key levels we just defined. You might wait for a confirmation signal before committing. For a bullish trade, you might wait for that break and hold above $112,000. For a bearish trade or to hedge your portfolio, you might wait for the break below $100,000. No matter what you do, the worst thing you can do right now is act on emotion. Don't let fear cause you to panic sell, and don't let FOMO, fear of missing out, trick you into making a huge bet without confirmation. The data is telling us to be patient and watch the key levels. The market will soon give us a signal. Your job is to be ready to act when it does. This market is moving fast, and these levels could be tested at any moment. The situation is changing every single day. If you want to stay ahead of the game and get my latest analysis, the best way to do that is to subscribe to my newsletter. I share my most up-to-date thoughts and charts there that we don't always have time for in these videos. The link is in the description. It's free, and it's the best way to make sure you don't miss the next critical update. And of course, if you found this balanced analysis helpful and want more content that focuses on real data instead of hype, make sure to hit that subscribe button and turn on notifications. It lets me know this is the content you're looking for and ensures you won't miss our next video as this incredible story unfolds. So, what's the bottom line? We are at a historic crossroads for Bitcoin. The price pulled back to test the monumental $100,000 level. a figure that was pure fantasy just a few years ago and now stands as a critical pivot point. We've looked at the evidence for both sides. The bulls are banking on long term accumulation, institutional demand from ETFs, and the strong defense of technical support. They see this as a healthy reset before the next explosive move higher, with some analysts still holding targets of $150,000 or $200,000. On the other side, the bears have a strong case for caution. They're pointing to slowing ETF inflows, a worrying death cross pattern on the chart, and a tough macroeconomic environment. They see this as a potential bull trap before a much deeper correction, possibly down to levels like $74,000. With so much uncertainty, our strategy has to be disciplined. The plan is simple. Watch the key levels. A decisive break above resistance around $112,000 would be a major win for the bulls. A sustained failure to hold $100,000 would be a clear bearish confirmation. It's also important to zoom out. Regardless of whether the next big move is to $130,000 or $90,000, the long-term picture for Bitcoin looks incredibly strong. Projections for 2026 and beyond remain overwhelmingly bullish, with some forecasts going as high as $1 million within the decade. This short-term volatility, while stressful, is just part of the process for an asset undergoing rapid global adoption. These periods of fear and consolidation are the price of admission for being part of what could be one of the biggest technological revolutions of our lifetime. Don't let the daily price swings mess with your head. Stick to your plan. Whether you're dollar cost averaging for the long haul or waiting for a technical signal to make a move, the market will show its hand soon enough. Our job is to be patient, objective, and ready. Thanks for joining me for this deep dive. Stay safe, stay informed, and I'll see you in the next one.